Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Barings Bdc Inc. Annual Report. Barings Bdc Inc. is a publicly traded investment company that specializes in providing various financial services to middle-market companies. The company's primary focus is on investing in senior secured loans, first lien debt, unitranche, second lien debt, subordinated debt, and equity co-investments. These investments are made in private companies across multiple industries, including manufacturing, distribution, business services, technology, transportation, and consumer products. The company's investment strategy involves providing financing for various corporate activities such as leveraged buyouts, management buyouts, ESOPs, change of control transactions, acquisition financings, growth financing, and recapitalizations. Barings Bdc also invests in companies with a proven track record of profitability, typically those with EBITDA between $10 million and $75 million. In terms of geographic focus, the company primarily invests in United States-based companies. The firm's investment preferences include companies backed by private equity sponsors with maximum revenue of $200 million. By providing financing solutions to middle-market companies, Barings Bdc plays a crucial role in supporting their growth and development. The stock price of Barings Bdc Inc. (BBDC) has not made significant changes in the past year, despite delivering a minus 12.91% change. Several news events have been reported recently that reflect the company's financial health and operational activities, which investors monitor closely. One such event is the announcement of the fourth quarter and full year 2025 results by Barings Bdc on February 19, 2026. The company reported a quarterly cash dividend of $0.26 per share, exceeding regular dividends, and highlighted strong portfolio performance with robust credit quality and low non-accruals. However, despite these positive developments, the stock price has declined over the past year. Factors contributing to this decline may include broader market trends, investor sentiment towards the business development company, BDC, sector, interest rate environments, and specific company news like dividend adjustments or changes in net asset value. Investor caution ahead of earnings, due to elevated rate volatility and scrutiny over the ability to maintain its high dividend yield, may also have contributed to the decline. The company's decision to decrease its dividend rate by more than 3% from $1.24 to $1.04 on August 9, 2025, may have further impacted investor confidence. Overall, while Barings Bdc has reported strong financial and operational results, the stock price has not reflected this performance in the past year. The decline may be attributed to a combination of broader market trends, investor sentiment, and specific company news. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. Investment performance plays a significant role, with capital gains and losses having a direct impact on revenue. Fees paid by the company to Barings also contribute to revenue growth or decline. In addition to investment performance and fees, expenses borne by the company for operations and transactions are another crucial factor. Income from investments in equity securities of entities treated as partnerships, distributions by the partnership, and net capital gain retention and taxation at corporate rates all contribute to revenue growth. Regulatory requirements and guidance under the 1940 Act can also impact revenue growth or decline. Allocation policies and procedures of Barings, investment opportunities with affiliated funds or accounts, and restrictions on transactions with officers, directors, or their affiliates are other important factors. Availability of capital and financing options, as well as the ability to meet coverage ratio requirements as a BDC, can also influence revenue growth or decline. Finally, net realized gain/loss on investments, loan origination and other fees received, and purchases and repayments of portfolio investments all play a role in determining revenue growth or decline. The net income and profit margins of a company underwent significant changes between 2024 and 2025. Initially, the net income decreased by $8,365 from 2024 to 2025, resulting in a minus 7.6% decrease. However, on page 102, it is mentioned that the net income increased by $32.2 million but also decreased by $5.4 billion. This inconsistency makes it difficult to determine the exact change. Despite this ambiguity, it is clear that the profit margins experienced fluctuations as well. On page 84, the profit margins decreased by -2.5%, while on page 102, they increased by 21.47% and then decreased by 10.74%. The net investment income after taxes showed a consistent increase of 12% from 2024 to 2025. The reasons behind these changes are multifaceted. A decrease in interest income due to lower interest rates contributed to the fluctuations. Additionally, the company's election to be taxed as a RIC under Subchapter M of the Code, commencing with taxable year ended December 31, 2007, may have had an impact on net income and profit margins. Potential disruptions in capital markets and negative effects from U.S. tariff and import/export regulations also played a role in these changes. The company is indeed generating positive operating cash flow. This can be seen from the financial data provided for the years ended December 31, 2024 and 2025. In both years, the net cash provided by operating activities was significantly higher than the previous year. For instance, in 2025, the company generated $160.5 million in cash from operating activities, a substantial increase from the $122.2 million recorded in 2024. This trend is also evident when comparing these figures to the preceding year of 2023, where the net cash provided by operating activities was $76,944. The consistent generation of positive operating cash flow over the past 3 years indicates that the company's operations are financially stable and capable of producing sufficient cash to meet its obligations. This is a positive sign for investors and stakeholders, as it suggests that the company has a strong foundation for future growth and success. The company's debt level and interest expenses have undergone significant changes over the past few years. Initially, the debt level increased from $23 million in 2020 to $100 million in 2022 under a new credit agreement. However, this trend was short-lived, as the debt level decreased slightly from $94,930,000 in 2024 to $96,434,000 in 2025. In terms of interest expenses, there is evidence that they have increased over time. The weighted average effective interest rate for total outstanding debt rose to 4.866% at December 31, 2025, indicating a higher cost of borrowing. Additionally, the interest expense itself increased from $68,189,000 in 2024 to $74,022,000 in 2025. These changes suggest that the company's financial obligations have become more costly over time. The company has made several acquisitions and divestitures as part of its business strategy. Acquisitions are a key component of the company's growth plan. On page 12, it is mentioned that the company has invested in middle market loans, private debt investments, and private equity investments. Additionally, on page 98, it is noted that the company has made similar investments in middle market loans and private debt investments, as well as equity investments listed on an exchange or the NASDAQ National Market System. Furthermore, the MVC acquisition and Sierra merger are also highlighted as significant acquisitions. On the other hand, divestitures have been a part of the company's strategy to manage its portfolio. The company has refinanced or repaid debt through divestitures, page 13. This includes the sale or merger of several portfolio companies such as Jocassee Partners LLC, Thompson Rivers LLC, Waccamaw River LLC, and Sierra Senior Loan Strategy JVI LLC. Moreover, on page 43, it is mentioned that there are potential sales of some investments, indicating a proactive approach to managing its portfolio. Barings Bdc Inc. has demonstrated its commitment to returning value to shareholders through both dividends and share buybacks. The company has paid consistent dividends over the past 3 years, with amounts increasing from $108,997 in 2023 to $125,247 in 2025. This indicates a growing ability to distribute profits to investors. In addition to dividend payments, Barings Bdc Inc. has also been active in share repurchases. The company has bought back shares worth $14,772 in 2023, $6,442 in 2024, and $6,349 in 2025. Furthermore, a new 12-month share repurchase program was authorized on February 19, 2026, allowing up to $30 million in aggregate repurchases. The company's current dividend payment is $0.26 per share, as declared in February 2026. This quarterly distribution demonstrates the company's ongoing commitment to providing value to its shareholders through regular dividend payments. There is no concern regarding inventory buildup or supply chain disruption. The available information does not indicate any issues related to these areas. As a result, businesses and stakeholders can operate with confidence, knowing that their inventory levels and supply chains are functioning as expected. That concludes the financial summary for Barings Bdc Inc. Feel free to comment below, and I will be happy to answer them when possible.